Wolters Kluwer expands ESG and sustainability programs. Wolters Kluwer continues to embed sustainability into its operations and product strategy, reporting key advances in emissions reduction, supply chain transparency, and employee engagement in the first half of 2025. The global information and software provider confirmed a 5% underlying reduction in its office footprint compared to year-end 2024, driven by a real estate optimization strategy that supports its long-term target of cutting Scope 1 and 2 emissions by 60% from 2019 levels by 2030. The company also received Science-Based Targets Initiative (SBTI) validation of its broader net zero goals, which include a 90% absolute reduction in Scope 1, 2, and key Scope 3 emissions by 2050. We are committed to achieving net zero greenhouse gas emissions across our value chain by reducing direct emissions related to our offices, suppliers, business travel, and commuting, the company noted in its July 2025 report. Scope 3, Supply Chain and Workforce Initiatives. To tackle Scope 3 risks, Wolters Kluwer rolled out a supplier sustainability assessment tool in early 2025. The platform provides insights into vendor decarbonization plans and labor practices, critical for improving ESG data quality and aligning procurement with sustainability benchmarks. On the workforce side, the company reported a stable turnover rate of 10%, with voluntary turnover at 7%. This quarter saw the launch of a new internal microlearning program on generative AI, building skills across teams. In June, the company also hosted a Global Well-Being Day featuring both in-person and virtual events to foster employee resilience and connection. ESG product innovation and market position. Wolters Kluwer's corporate performance and ESG division recorded 7% organic revenue growth in H1 2025, driven in part by new features on its CCH Tagetik platform and strong uptake of the Enablon suite. The company introduced a new CBAM, Carbon Border Adjustment Mechanism, module and expanded AI-enhanced safety and environmental reporting features for enterprise clients. Recurring cloud software revenues for the division rose 17% year over year. Despite sustained investment in product development and sales, adjusted operating profit for the division rose modestly by 3% in constant currencies. Wolters Kluwer's ESG risk rating from Morningstar Sustainalytics currently stands at 12.2, placing it in the top 5% of companies within the global software and services sector. The company also saw an improvement in its Carbon Disclosure Project (CDP) score to B. Additional H1 2025 highlights: $3.33 billion in total revenues, with 5% organic growth across all divisions. Recurring revenues, 84% of total, grew 7% organically, while non-recurring revenues declined 4%. Recurring cloud software revenues grew 15% organically, now exceeding on-premise license fees. Adjusted operating profit rose to $943 million, up 14% in constant currencies. Diluted adjusted EPS increased 14% to $2.94, $551 million in adjusted free cash flow, up 13% in constant currencies, $694 million in share buybacks completed through July 29th as part of a planned $1.09 billion program. Divestiture announced. The company will sell its finance, risk, and regulatory reporting unit to Regnology for $491 million in a strategic realignment. You've been listening to Sustainability Soundbites from E+E Leader, where the business of sustainability meets real-world impact. Thanks for being a loyal listener. To inquire about brand partnership opportunities, reach out to a member of our team today.